The next problem says that during the month, the company had total manufacturing costs of $110,000. Okay, so let's just stop right here and talk about what it means to have total manufacturing cost. Total manufacturing cost is just another way of saying total production cost. So to come up with total manufacturing cost, that just means they added together direct materials used plus direct labor plus all of the manufacturing overhead. Okay, so they're just telling you they added those three things up and it totaled up to $110,000. It says they incurred $40,000 of direct labor cost and $30,000 of overhead cost. So let's fill in what else we know. So we don't know direct materials used. We know though that direct labor is 40. We know manufacturing overhead is 30. And we know if we added all of those three things together, it totaled up to 110. It says if the materials inventory on January 1 was $3,000 less than the materials inventory on January 31st, what was the cost of the materials purchased? So the material purchased account is obviously dealing with raw materials. So what the question is really asking us for is we have a beginning balance. Again, it doesn't give us an actual number, so this is just where you can make something up as long as it works. So I'm going to do a 0. Okay, so I'm going to say the beginning raw materials is 0, which is fine as long as that is $3,000 less than the ending. So raw materials is started with 0, then we had purchases, that's what we're looking for. What we subtract out is direct materials used, which we don't know either. And then ending balance would have to be 3,000. Because if the material inventory on January 1 was 3,000 less than the materials inventory on January 31st, if we said the beginning was 0, that would have to be 3,000 less than the ending, so that's how I know that the ending would be 3. Again, you just make those numbers up. So in order to answer the question, in order to find material purchases, we need direct materials used. To get direct materials used, we have to come back to the fact it told us what total manufacturing cost was. So it told us that if we took the material used plus labor plus the overhead, it equaled 110. We know that the labor and the overhead was 40 and 30 respectively, so that gives you 70. So if it totaled 110, then that means that the direct materials used had to have been 40,000. Okay, so direct materials used had to be 40 because used plus labor plus overhead equaled 110. So now I can fill in the direct materials used. So now I know direct materials used is 40. And so that means I must have purchased $43,000 worth of product. So your answer on 20 is 43,000. The next question says that our softball company estimated the following at the beginning of the year. It gives you overhead for each department, direct labor hours for each department, machine hours for each department. It says that we use departmental overhead rates. It says, and remember, all that means is that every department is going to use a different cost driver. So in the assembly department, it says that we're going to use direct labor hours, and so for the assembly department, we're going to use direct labor hours, and machine hours are going to be used in the testing. So that's all we care about. That's how we know what our cost driver is going to be. So it says if job 4 spends 4 hours in assembly and 3 hours in testing, what is the amount of overhead charged to the job? So what we're going to do is come up with, first off, some overhead rates. So for your overhead rate for assembly, to come up with overhead rate for assembly, it's just going to be 570,000 divided by 142.5. So your overhead rate for assembly is $4 per direct labor hour. Then I'm going to do the same thing in testing. In the testing department, your rate is 130. Or sorry, your overhead is 130. You're going to base it on machine hours, which are 65,000. So that's going to give you a rate of $2 per machine hour. So now we have to figure out how much cost we're going to give to this particular job. So in the assembly department, this job spends 4 hours in assembly. So the rate in assembly is $4 per machine per labor hour. So that's going to give you $16 plus. So this job spent 3 hours in testing, and so your rate in testing is $2. So your rate in testing is 2. This job spent 3 hours in there. So that is going to give you a total of 22. So your answer on number 21 is going to be A. Now, I realize the question is not necessarily worded perfectly. It probably should have said 4 labor hours in assembly and 3 machine hours in testing, just to make it a little bit more clear, but that was the intention of the problem. So your answer is going to be $22. So definitely what I want you to make sure you know how to do is to calculate the overhead rate and then to apply it. Next question says that the company had the following amounts listed before reconciling the overhead variance. So they had estimated overhead, applied overhead, actual overhead, and cost of goods sold. Okay. So it says, assuming the overhead variance is immaterial, calculate the adjusted cost of goods sold after adjusting for the overhead variance. Okay. So remember, this is the very last piece of applying the overhead. We talked about how at the end of the accounting period, or whatever time frame you're looking at, you're going to calculate over or under applied overhead. And you're going to calculate this amount, and you're going to adjust it to cost of goods sold. So this is what the problem is wanting you to do. They're wanting you to calculate the amount of overhead that's been over or under applied, then understanding how to fix it, so to speak, to cost of goods sold. So remember to come up with over or under applied overhead. It's the difference between actual overhead and applied overhead. So they're making it easy. They're giving you both of these things. It says that the actual overhead is $740,000. Applied overhead is $756,000. So that's giving you a difference of $16,000 of overhead. And you do need to know if it's over or under. So applied was $576,000. Actual was only $740,000. So you over applied. So you gave too much overhead costs to the product. So fix that by subtracting from cost of goods sold. Okay? So to get cost of goods sold to be the correct amount, you need to subtract anything that has been over applied. So if before the adjustment cost of goods sold was $935, then subtract from it the amount that you are trying to adjust. So I've got $935 minus the $16,000 over applied. So that's going to make your cost of goods sold $919,000 after the proper adjustment. 20 we went over in class. I'm sorry, 23 we went over in class. 24 is a job order costing question. It says that we had 3 jobs in process. We had 12, 13, and 14. 2 more jobs were started, 15 and 16. It says by the end of September, 12, 14, and 16 were finished. So what I want to do is I just want to come over here and make a little notation on that. So above job 812, I want to say, okay, I finished it. So if I finished jobs 812, that means that the cost went to finished goods. Because remember, your cost flow is raw materials, work in process to finished goods. So once I complete a job, the cost of that job is going to transfer to the finished goods account. So right now, the cost of job 12 is in finished goods. The same for job 814 and the same for job 816. Then it gives you the facts. Then it says overheads applied at a rate of 120% of labor cost, which we'll need that in a minute. Jobs are sold. Gives you some selling and admin. Then it says by the end of the month, job 812 and job 816 are sold. So I need to come over here and say, okay, well then if I sold job 812, that means that the cost is no longer in finished goods. Now it's in cost of goods sold. So it's the same thing for job 816. We finished it and we sold it. So if it's finished and sold, it's in cost of goods sold. If it's finished, if it's complete and still there, it's in finished goods. Everything else is in work in process. So the question says, what's your ending balance in finished goods? Well, we can look at this real quickly and realize that 813 and 815 are still in work in process because it didn't tell us anything about them. Job 812 and 816 are sold, they're gone. So the only job that's left in finished goods is going to be job 814. So all we have to do is calculate that job. So to calculate the cost of the particular job, you want to start with the beginning balance, add to it the direct materials, the direct labor, and the overhead. Do not forget about the overhead. It tells you that to calculate the overhead, it's applied at a rate of 120% of the direct labor cost. So to come up with the overhead, it's simply 120% times the direct labor cost. And you know that because it just tells you. Overhead is applied at a rate of 120% of direct labor cost. So that gives you $672 of overhead, plus the labor, plus the material, plus any beginning balance. So when you work that out, then that means that your ending balance in finished good is $3,457. So your answer on 24 would be E.